All right, today we're cracking open the financial report of a giant in the luxury watch world, Cortina Holdings. You know, these reports can look like a wall of text and numbers, but I promise you there's always a really interesting story hiding in there. And our job is to pull it out. So let's get into it.
So right off the bat, we've got this number, plus 10%. That's the headline. In just the first 6 months of their fiscal year, Cortina's profit shot up by 10%. Now on the surface, that looks like a huge win, but what's really going on behind that number? Is it as simple as it looks? Well, that's what we're here to find out.
Now, for anyone who's not familiar, Cortina is a massive player in the high-end watch game. Think of them as the gatekeepers for some of the most exclusive, sought-after brands out there. So when we look at their financials, we're not just seeing how one company is doing, we're actually getting a pretty good pulse on the entire luxury market in Asia.
Okay, so here's our game plan. We'll start with the big picture, that strong half-year result. Then we'll dig into where all that money came from. After that, we'll look at the other side of the coin, the rise in costs. Then we're going to play detective and follow the cash flow, because there's a little mystery there. And finally, we'll see what the company itself thinks is coming down the road.
So let's kick things off with that headline number. A 10% jump in profit is a big deal, especially when the global economy feels a little shaky. I mean, this is the bottom line, right? It's the ultimate report card. But, you know, one number never, ever tells the whole story.
Let's put some real dollars to that percentage. Net profit went from 27.8 million Singapore dollars up to 30.5 million. That's a jump of almost 3 million bucks in 6 months. So the what is crystal clear. Business is good. Now, let's get to the why.
A bigger profit has to start somewhere, and that's usually right at the top line, revenue. You got to sell more stuff to make more money, right? So how much more cash did Cortina actually bring in through the doors?
And the answer is a whole lot more. Revenue shot up by 13.5%. We're talking from 413 million to almost 469 million Singapore dollars. That is not a small increase. It's a massive signal that the demand for these ultra-high-end watches is still red hot in their main markets.
But just saying sales are up, it's kind of boring, isn't it? The really juicy question is where? Which countries, which regions are really driving this boom?
And boom, here it is. This is probably the most revealing slide of them all. For years, Singapore was the powerhouse. But look at this. The rest of Southeast Asia has now taken the top spot. It's their single biggest source of revenue. That tells us the hunger for luxury goods is exploding across the entire region, not just in the traditional hubs.
Okay, so things are looking amazing, right? Sales are through the roof. But here's where the story gets a little more complex. Because all that incredible growth, it doesn't come for free. As the business gets bigger, so do the bills. And this is where we start to see the pressure building.
In this slide right here, this tells a crucial part of the story. Revenue is up 13.5%. Awesome. But look at their operating expenses, up 13.3%. They're rising almost in perfect lockstep. When your costs go up almost as fast as your sales, it puts a real squeeze on your profits. It's the classic challenge of growing a business.
So, what's behind these rising costs? It's not one single thing. The report points to a few culprits. You've got higher staff costs, you've got to pay to keep the best people, increased rent for those prime storefronts, you have depreciation, that's just the value your stuff loses over time, and then there's a sneaky one, foreign exchange losses. All these little things start to add up and weigh on the bottom line.
And we can see the impact of this on a really key metric, the gross profit margin. Now, don't let the fancy name fool you. All it really means is, for every dollar of watches they sell, how much profit do they make before paying for things like rent and salaries? And you can see it slipped just a tiny bit from 32.2% to 31.8%. It's not a disaster, but it's definitely a trend you'd want to keep a close eye on. All right, now for my favorite part of any financial report. A little mystery. The company just told us they made more profit, so you'd think, great, they must be swimming in cash. Well, not exactly.
This is the big question for this section. It just doesn't seem to add up, right? More profit should equal more cash, but the bank statement tells a completely different story. So, what happened to the money?
And I'm not making this up. Look at the numbers. Cortina's cash on hand actually dropped. It went from over 132 million down to about 115 million in just 6 months. That's a $17 million dip. But the cash didn't just vanish. It was put to work.
So here's where it all went. They used that cash in 3 really deliberate and pretty smart ways. First, they beefed up their inventory by over 21 million.
I mean, you can't sell watches you don't have, right? Second, they paid down some loans and leases, which makes the company stronger financially. And third, they rewarded their shareholders with a hefty $26.5 million dividend payout. So, less cash in the bank, yes, but for very good reasons.
So that's the story of the last 6 months. Pretty solid. But what about the next 6? For our last section, let's look at what Cortina itself is saying about the future and the challenges they see coming. You always find a phrase like this in these reports, cautiously optimistic. It's classic business speak. So let's translate, shall we? It basically means, hey, we're confident we'll keep doing well, but we're not sticking our heads in the sand. We know there are risks out there. It's the perfect way to manage expectations.
And what exactly are those risks they're being so cautious about? Well, they're pointing to 3 big ones. First, just general uncertainty in the global economy. Fair enough. Second, a strong Swiss franc. This is a huge deal for them, because that's where the watches come from, and a stronger franc means each watch costs them more to buy. And third, high gold prices, which of course makes many of these luxury timepieces more expensive to produce in the first place.
Which brings us to our final big question. Cortina's results prove that the super rich are still spending. The desire for luxury seems bulletproof. But with all these economic storm clouds gathering, you have to wonder, is that legendary resilience of the luxury market about to face its biggest test yet? Cortina's next report will probably give us a clue. Thanks for diving into the numbers with us.